Let's get an analyst, an expert in. Shardul Pradhan of Quant Capital joins us. Shardul, what have you made of the numbers that you've heard so far? 2,500 crore in terms of revenue. That makes it down about, what, 35%? And profit coming in at 126 crores. That's seriously lower.
Yes, definitely. In fact, this is on the top line front, at least it was kind of in line with what we had expected. We also had around similar kind of an expectation. But your real hit here in this particular quarter was that they had the atorvastatin, which was missing. I mean, you have one is your base effect, because this is the first quarter last year of full benefit of a atorvastatin exclusivity. On the other hand, this year that part of the revenue is completely missing.
Okay.
So I think this is a double whammy which has hit them.
High base and, yeah, okay.
So even on the EBITDA margin, we had around 8.7% of EBITDA margin. But of course, that's particular skew of, besides the fact that this part of the revenue is missing, on the other hand, what they would be incurring in terms of expenses on the regulatory front. And that would have been also an additional hit for them.
Sure. Shardul, is there any trigger for someone to go and buy Ranbaxy at current levels? Or, I mean, would that be part of your top list now, or would you look elsewhere?
I think now for this stock to move up, it's seriously missing triggers. I mean, one the biggest play for this company over the last year was this atorvastatin exclusivity. Now that's played out, and many of the paraphors have been delayed and not coming through. So I think if this is only thing one should look at this one is basically how their business stabilizes going forward. But in terms of the big kickers, I really don't see anything meaningful happening today.
Okay. We are also joined by another expert, stay on with us, Mr. Pradhan. Vivek Kumar of SBICap Securities also joins us. Vivek, what have you made of the numbers? There is a net forex inflow as well of 46 crore. In spite of that, they have made it to only 126 crore. What is worrying the stock, and what would you do with it?
No, so I think it looks that the results are purely online, what we have estimated in terms of the core operating level. I think what's more important to be looked at and where the investors will be more interested into is that they have done about 7% operating level margins, which is on the core business, which is more important to be looked at. And I think the consensus was around 10% odd, and we were about 6%. So I think to that extent, I think it seems to be in line. But however, if you look at the forex thing, we anticipated about a forex gain of around 110 crores, and wherein the net forex gain has come to be around 50 crores around that. Right? So I think net to net, if you look at the top line, the numbers are in line. Margins level have been kind of beaten by by 1% almost to what we expected. But however, at that 7% is still much lower than what people must have actually anticipated out of it.
Okay.
So Vivek, what's the call on the stock now?
I think we will retain our buy rating on the stock. We had about 476 as the target price.
And what's that predicated on? Is it on valuations, or is it some
earnings growth?
No, I think what is more important to be looked at is purely, yes, I think we are looking at certain updates on the consent decree which they have done. What is the progress on that, number one. Number two is that we are building certain hopes on the day one potential monetization of that particular product, which is still $1.5 billion product opportunity. And number three, I think there has been a branded a dermatology business which they have. There's an increasing market share movement out happening in the Opsorica business. So I think these three businesses, if that comes up comes up in line with calendar year 13, then possibly you could see some movement into the stock, but then most of the recovery would possibly happen in the second half.
Okay, so what are you let me get Shardul also into the argument. Shardul, actually the adjusted EBITDA margins are working out to 7.6%, still lower than what the street was, or at least the poll threw up of 9.2%, but not as bad as the original number. What's your sense about how the stock is headed? Will there be further attacks? And more importantly, are all the uncertainties in terms of FDA and warnings coming on certain facilities, is that overhang over and done with?
So, from 6.6, if you even take it at 7.5 or you 8% already, you adjust the margins, I don't think that really changes anything in the bigger picture. But as you rightly pointed out, there are a number of uncertainties. Yes, there are products which could go delayed, could get approval, and that could be a kicker for them.
Okay.
But for so long it has dragged, and it's, as you said again, it's uncertainty. So I would still consider that would be an overhang for them. And in terms of the regulatory issues, if you've seen, the regulatory issues don't seem to get over. There's something or the other keeps on coming, which happened recently with autostatin again. So I think these things will maintain pressure. They really need to get these things behind them and show a steady, sustainable performance until I think complete faith is there in the stock. So I don't see a very big move from the current levels on the upside.
Okay, Sarabjit Kaur of Angel Broking also joins us. Sarabjit, your first thoughts, was it a major disappointment as the markets are making it out to be? They have ticked the stock lower by about almost 3%.
Yeah, Lata, I think the results are disappointment primarily because of the way the company is performing on the operating front. The margins continue to, though they have shown improvement on Q-on-Q basis in terms of margins, core by business margins. Last quarter they were around 3%, so this quarter they have done decent enough at 6%. But I believe that's the main concern everybody has, that that the margins of a pharma business are not typically that low. So unless the company's operating performance improves and stabilizes at a profitable level, I think the overall overhang on the stock will continue to remain there.
Okay. Well, let me get one word from all of you on what kind of earnings growth you all are expecting. I know it's a difficult, it's a volatile stock to predict and maybe even volatile company performance. But Sarabjit, what kind of earnings growth are you looking at in the current year?
Lata, we are actually not looking at an earnings growth happening, because even though if we look at a meager top line growth, the margins on a Y-on-Y basis, at a 10% or a 6% margin, the earnings growth momentum will remain towards a negative kind.
So the earnings fall is expected to be how much?
Yes.
What might they do in terms of
looking at
EPS?
roughly around 15 to 20% actually.
Okay. And Vivek? Okay. Shardul, if you are there, what are you expecting by way of an EPS the current year?
In the current year, we are expecting an overall EPS at around 30 rupees. Of course, taking into account, we have also accounted for whatever upsides they could get from some of their exclusive even iron, which is delayed. Still expecting it will come out, and with that kicking in, we are looking at around 30 rupees EPS this year, around 41 next year. So we have a price target of 442, but I don't see a meaningful upside from this point. So yeah, we would avoid the stock at this point.
Fair enough. Leave it at that.
Indeed. So thanks a lot, Sarabjit, and the two gentlemen as well for joining us and talking about Ranbaxy. So that